Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Wednesday, October 19th, 2022. Let's jump into the charts. Where to begin? Let's take a look at this one. This has a lot for today. Now, on Tuesday, we gapped above the high of the low and this trend line. We did spend more than a minute or two above it before it came breaking back, and that pretty much held through the balance of the day today at 227.25. So that is our resistance that, if tested today, can contain buying through the balance of the week. And from here, we can fall back to the 206.85 low from last May, a level that we tested. Let's see, we settled below it on last Friday by just a hair. And obviously came gapping back up. Monday was a big rally day. Tuesday was that we took all the highs out from the previous week or so, and then we came back, still closing slightly positive on the day. So, I'm still framing this over the 3 to 5 day time horizon as kind of a two-sided dynamic between 227.25 ceiling and the 206.85 May low floor. On the way down today, I've got 213.96 as a 5/8 downside Fibonacci against the last 3 days. Friday's low against Tuesday's high. 5/8 back is 213.96. All the minor points have been carefully chosen, well suited for aggressive day traders. But in terms of bottom picking this market on an intraday basis, I think 213.96, not a bad pick. From there, we could rally back into the 220s quite easily. Upside today, 222.05 is an intraday resistance area. We could trade inside the 213.96 to 222.05 range for a good part of the morning or the day. If we push or open today back above 222.05, 227.25 is likely on an intraday basis, where once again we can top out through the rest of the week, and below which 206.85 in reach over the next few days. Possibly today, if we break or open below 213.96, that 206.85 area able to contain selling through the balance of the week, and we can rally off of here back into the mid to upper 220s again within a matter of 3 to 5 days. If we do close once again below 206.85, I think this one is for real, if you will, in that it would indicate bearish continuation through the rest of the week and into next, then anticipating within a week or two of doing so, the 177.11 to 185.51 area, which you can see here. This is the weekly chart version. I'm going to see if I have the daily chart version here. I do. No, I don't. It's the weekly chart version. So these formations all show up, of course, on a daily bar chart. We monitor them on a day-to-day basis. So right now they are 185.51 to 177.11 on the daily chart, 177.18 to 185.29 on the weekly. So the point I'm making here is if we close today below 206.85, we should, I'll say by the end of next week, test this significant 177.18 to 185.29 region, dropping ever so gradually. This channel bottom we tested in May. It held lows through Q2 and into Q3 before falling off, obviously, and we spiked through it. So if you cast another channel structure off the spike low and just call it a band of support that actually converges over the next few weeks with a long-term 5/8 Fibonacci level, A is the March 2020 COVID low. It doesn't look like much on this chart, but at the time it was the most significant downside pullback Tesla had seen since its IPO. And so, and with respect to the triple Q and the SPY, this was a big low, a big spike low, and it was a meaningful low. And comparing A, B, 5/8 back is 172.77. So I don't want to get too deep in the weeds on the big picture analysis here because we're really talking the day itself. Let's talk upside here today. By the way, this document is downloadable for free. You have a link below the YouTube screen where you can grab it. If you click on any of these charts, it takes you to the respective blown up page. I do want to show you here. This is the high of the low, 226.26, and that trend line once again, 227.25. If we push or open today above 227.25, and I know we did that on Tuesday, but this time, if we open above 227.25 or push through it, we do have these minor resistance levels. 229.82 is nothing more than Tuesday's high. 233.27. I could go on and on and on, but we could reach 240.53 on an intraday basis if we push through 227.25, and that is 240.53. A simple trend line off these lows that can contain daily buying pressures only. Bottom line, if we close above 227.25, and I'm going to go back to this chart to underscore, we'd also be closing above the high of the low from last Friday, which is a buy signal in and of itself. So closing above 227.25, I think carries with it a 2 to 3 week rally back into the mid 260s, the low 270s, midterm resistance. By midterm, I'm talking monthly containment. So if we happen to test this area by the end of October or the second week of November, it can contain buying through November and into December, and we can fall off from here. So, it would just be sort of a quick blast to the upside. A couple of weeks, closing above 227.25, we then run into trouble, serious trouble in the mid 260s, low 270s, where this stock, Tesla, faces a meaningful test of resistance that could contain buying perhaps through the rest of the year, and we could then fall off again from there. I don't think that there's much else to say other than, I'll reiterate that we've got sort of a two-sided dynamic today between 213.96 and 222.05. If we violate either point, expect the next respective level, meaningful, notable level above 222.05, 227.25 expected, where we could top out through the rest of the week and then fall back to 206.85 within a matter of several days. Closing above 227.25, we have a 2 to 3 week rally into the mid 60s to low 270s. Downside breaking or opening below 213.96, 206.85 in reach today, where we could bottom out through the rest of the week and head back into the mid to upper 220s within a matter of 2 to 3 days. Once again, and final thing I'll say is closing below 206.85, that long-term support in the 177.11 to 185.51 region, then expected by the end of next week. And I will say one more thing, that it was the settlement below this 271.29 rising two-thirds speed line that indicated not only 206.85 within 3 to 5 weeks, and that happened inside of 2 weeks, but also the 177.18 to 185.29 region within 2 to 3 months, which if we close below 206.85 today would have occurred within 3 to 5 weeks. So this market still can test 177.18 to 185.29, and closing below 206.85 should result in that within a hurry, like within a week of trade. I think that pretty much covers it for Wednesday's Daily Tesla Report. Please click like and subscribe each and every time you watch the Tesla Report. It helps us out a great deal, and we will be back tomorrow with Thursday's Daily Tesla Report. You have a great evening.